And good evening. This is the Eye of the Storm podcast with the big picture, technical picture for the SPX and the NDX on Monday, May the 29th, 2023. I'm starting a new format, so quickly just updating that. I'm going to be giving just a technical picture. So just technical, no fundamentals, just technical in the SPX, the NDX, the Treasuries, gold and silver, and the dollar, and each one are going to be separate. So we're starting here with the SPX and the NDX, and the goal is to try to keep it to about a 15-minute update. So this is the big picture update for the SPX and the NDX for Monday, May 29th, 2023. The markets are continuing to feel an updraft, and that updraft began last week after NVIDIA reported very good earnings, and the forward guidance was pretty strong. And so the market is reacting to that. In fact, that overflow has now spread to what is being considered the artificial intelligence, the AI sector that seems to be forming. And so we have a lot of stocks that are participating in AI in one way or another. And so that continues to get balanced out as to what needs to be added and what people are buying. With that in mind, the SPX has caught a lot of that wind, that upwind, but not necessarily reaching the same heights as the NASDAQ. So the NASDAQ at the moment is outperforming the SPX. That's pretty clear. I'll talk about that in just a moment. Here in the SPX, what my count remains the same. And let me just flip out to a weekly chart. And actually, I'm going to go to this smaller weekly chart. So we can see the all-time highs. Those remain in place. So what I continue to track is the initial stages. We're now on a primary degree of the waves coming down that will ultimately form this larger corrective phase, which is a supercycle wave 4. So this is a pretty big picture. This is a multi-year picture. So the correction is going to roll out over a much longer period of time. Where we are within that is that I'm looking for, on a primary degree, an A, B, C down. And then we would then have completed a primary ABC, taking us up to this next level, where we will then have to put in a cycle wave A, which would come once we reach those levels. We'll reach the cycle wave A and then produce a much longer, larger rally phase. But here we sit in what I'm still considering a primary B wave, but it's counter trend, which suggests that we're still in a quote unquote bear market or a down cycle. We have some other cycles that are coming in and making adjustments to what's happening today, tomorrow, and possibly a little bit longer than maybe was originally anticipated. But that's yet to be seen. So with today in the technical picture, I want to include the potential on this big picture of where this market could go. So let's start to break it down. Still in that primary B. Within primary wave B, we've done intermediate wave A, B, and so we're in the intermediate C wave. I'm coming down out of the rafters, looking at the daily chart, and we can chart out that there's intermediate A, intermediate B. We're in an intermediate C wave up to complete primary wave B up. So again, on a cycle basis, there remains some time left on a little bit of a longer-term cycle to crest and then start to go into its down phase to the next low. So that's still got a little bit of time to go. So again, that coupled with what we can consider now levels for the intermediate C wave. So using the Fibonacci and the Elliott, a C wave, here are the levels. Most consistent would be A and C are equal. So we have the equality, and that's going to be at 100%. And that comes in SPX 4513. I'm rounding that up. And we now can drop down inside of it. And the way that I'm counting is that within this intermediate C, there are 5 waves of minor degree, 1, 2, 3, 4. Would place us in that minor 5th wave. Now, within that, I come down to the 4-hour chart so I can start to see inside. And that's where we remain in. And I got 1, 2, 3, 4. We're in that 5th, minor 5th, which will consist of 5 waves of minute degree. And this is where we may have a change in the labeling only. So right now I'm labeling it. It is a triangle, a diagonal triangle in formation, but yet it's not really forming. So it is and it isn't. So what I can count is a 3, a 3, and a 3. So I may have to move the 1 up to here, which suggests that this is 2, and we're going to be completing a 3rd wave. Now, under that implication, we would be looking for at least a break of 42.43. If not, that we're going to come up to 43.05, possibly a bit higher. Now, again, I'm on a 4-hour chart, which is working a little bit in a bigger picture. If we remain within this and we're within that minute 5th wave, again, this is 3, 3, 3, 3. So we're still following the pattern as it should. The extension would come that this ends up being minute 1, and these break down then into minuet degree A, B, C, wave 1, A, B, C, wave 2, 1, 2, or 1, 2, 1, 2, 3, 4, 5, finishing a 3rd. So the 3 of the 3, possibly. We do a 4, and then we run up. So we have our choices of where we can look for where this is going to stop. And that's going to be likely our first level. Again, equality puts us up to 45.12. But now I'm going to come down and start building my internal, what I'm thinking. As is, where do I have resistance? I'm going to first put in, if this is indeed a minute 4, then I'm going to connect it to minute 1. And that's where my fibs come in, and those are the extensions. So minute 5, when compared to minute 1, also comes in at equality, and that's the 100%, which it did do on Friday. And that was and that level was 42.09, but the high of the day was 42.12, almost 42.13. So could we put a 5 there? Well, technically, yes. Here's what we need to leave open, that it only finished the 3rd. We got a 4, and then still another ride up. So what comes next after that, after equality? Well, 0.618 we've gone through, so that's out. 1.618. So we got that up here. If it's 1, 2, 3, 4, and we're going to push on a 5th, we got 42.75. That's the fib. Now let's walk out and take a look at what else we have. 618, 4, and that one would be 4. And let me go back out to that 4-hour chart. That one is for the C wave, where wave C would be 0.618 of wave A. Again, drop back down. Where's that level? That level is 42.43. The futures market went to 42.43 in today's Globex, the one that actually began yesterday. So if the future wants to go to its next level, which would be above 42.43, it would, of course, then drag the SPX up, and maybe the SPX has a fairly fair chance of reaching 42.43. If not, and we start to break, then we have our levels, 42.75. That's the 1618 for a minute wave 5. And then for the C wave could be 0.618 at 42.43. Both achieve their purpose in terms of, if we bring it back out to the 4-hour chart, there is wave A. We barely broke above that. Well, we have now, but not on a 4-hour chart or even a longer term chart. Has it broken it significantly? That high was 41.95. Friday's high was 42.13. So we're looking at an 18 point. It exceeded by 18 points. Barely noticeable, because it barely broke above what we were still considering wave 3, which was 42.02. So we're not that much above those highs. But 42.43, looking good. And wave C definitely can come in. Wave C does go above wave A. Technically, that could work. And we've got a double, that could work. Breaking these levels, so if the S&P continues to get pushed higher by what's happening outside of it, in the NASDAQ, say, for example, then we do have higher levels. Going back out to the daily chart, so I'm going to do this, and then I'm going to bring this down. We do have higher levels. We have one where it's much higher. It's at 45.13, and that level would be where wave C would be, 1 point, well, that's at 49. The 100% level of 45.12 is where wave C would be equal to wave A. And then we don't want to go out to that one, which would be next. The wave C would be 1.618 times the length of wave A. But I want to tell you, technically, you got to look at it. You got to look at it. You can't say can't happen. Now, please understand me. This is a technical picture. But what I'm saying, don't get misled with that can't happen. I'm showing you technically where it could. I'm not saying that that's what's going to happen. That's the difference. But there would be a path if the market breaks and starts to really build on that break. Right now, I'm going to come back down real quick. If I come back to the hourly, it doesn't really appear that it wants to. And even if I go out to my daily chart, the daily chart has been stuck. And what am I going back here? I'm going to the August highs. The August high is 4,300. It's 4301. So we have additional numbers there. And again, where the C wave could come above that B wave, the August high, yeah, it can. And we have numbers that'll show you. Now, on the biggest picture, what would we be looking at? And I know and then I'm going to move on. I got to go to my next one. That high, if this is A, we can have an irregular B. Am I looking for that? No. But as I showed back in October, when we got that as a low, what the levels could be and what that primary B wave can do. If the primary B wave was going to turn into a flat on this large of a picture, well, then you're talking about it going back to 48.0. The high was 18, 48.18. That's where the flat would come in. Do we have that? Yes, we have the fibs that take us there, where wave C would be 1.382 times the length of wave A and still be not quite irregular. Threatening it, if it moved to 1.618, it's actually going to be an irregular. I can't begin to tell you what was going to push it to up that, but technically on a weekly basis, so it's a bigger picture, you can't say no. Now, I'll cover the fundamentals in a separate update. Finishing up here, moving averages continue, at least on my hourly chart. They're now following the market. You got the 4 and the 8 following very closely, got the 20 aiming up, and we've got the 50 aiming higher, and the 200s are beginning to turn. That continues to support. Now, they may be called lagging, that's okay, but they continue to support upside on the hourly chart. Upside on the daily chart via moving averages is very much in alignment. And we did put in a fairly bullish bar on Friday. Over in the NDX, it continues to be the surprise story, and surprise in the way that the market has caught fire and how much that has spread. Excuse me. In terms of a lot of additional stocks have joined this AI surge. So there's a lot of beneficiaries to NVIDIA's earnings report last week. So getting right into it, on the NDX, so this is the cash market, I continue to count a primary B wave. And let me pull this out to the weekly. Same deal. As we can see, it's still a fairly normal primary degree B wave. It's just exceeding targets, and not because we miscounted, but because the market was tossing signals as it reacted to what was happening around it in terms of interest rates, inflation, bank failures, etc. All of that will be covered in the fundamental, which is coming. Back to the technical picture. The market continues to show strong possibilities that we still have much more additional upside to go. And I now want to just fill in those blanks. Right now, the way I've been counting this is that there's the A, intermediate B. We're inside of intermediate wave C. One change that may come into play. It still could be 1, 2, 3, 4, and we're in that fifth wave. We have the resistance at 14,349. The futures market closed above that level. There's still about $71 premium, I believe, in the June contract, give or take. And even if that was the case, 44.04 minus 14,000, oops, 44.04. Nope. I'm going to get it right, I promise, 40. I'm just doing some simple math here. And so, in essence, if the market were to get up to that level, 14,349, it would actually require the future to kind of open right where it is on Monday, or to trade higher, because then we'll get that gap up in the underlying. So, and that would give the cash market the boost that we need. But that would suggest that we might be completing that. So let me build up that now picture. Internally, if indeed, got to go out one more. If indeed we are in, and this is going to be correct, right? 1, 2, 3, 4, 5, that we're finishing a 5-wave rally of some kind. Now, I just want to show you what the only other interpretation of the pattern and the count would be moving minor wave 1 up to here. That would suggest that we are in a much larger C wave going up, and that we are in the midst of a third wave here. That would be the alternate, and it is still sitting there in alternate position for right now. Within that, I now want to start to figure, this is just for the C wave. So what we have here is the C wave. 1.618, where wave C would be 1.618 times the length of wave A, comes in at 15,643. Technically, yep, it's there. Again, making reference, going back to the October lows and discussing what is the potential for this larger B wave. And if I go out to my daily, I actually got to go out to my weekly. I can show you that what we have is this just in retracements on wave A. Now, 0.618 of a retracement for wave B against wave A, primary degree, comes into 14,350. Well, we got up to what was the high? The high on Friday was 14,329. So it's not all that much more to 350. It can get up there, and that might to complete the 5. Now, a little bit different situation. So what I'm going to go back down and, oops, I got to go back one more. Go back to the 4-hour. And if I just going to put in the fibs, I'm going to leave the count as it is. But I want to take a look at if we're thinking that this is wave 1, and we're in the midst of completing a 3rd wave, right? So if this is wave 1, this is wave 2, and we're inside a 3rd, where do we have? We've already surpassed the 100% where wave 5 or wave 3 would be 100% of wave 1. What is the more common? 1.618. So we really start to pop through these levels. And we need to, that's if, and again, we need to get additional confirmation of how it breaks within this possible 3rd. So then I'm going to bring it back down to the hourly chart. We just put an outside look at it, right? If this is a 1, this is a 2, we're inside the 3rd. What it would suggest then, we do a 4 and then a 5. Under this particular count, we're inside what could be the 5th. And if that's the case, what are the limitations? What are we looking at coming into this? Well, we have 14,349. Then we have 14,403. And that, I believe, might be, and I got to put in one more. So again, I'm sorry, I keep going back and forth. So we have the C wave, which we know is 14,140. 14,140. Well, done. So I'm going to take this guy, because this comes way up here. 1618, 15,643. So we have to be able to now, these inside ones are for the minor 5th wave. Minor 5 has been, as for 1% equal, the equality's been blown. The next level would be 14,928. That's on a minor 5. Now I'm going to bring it back down, if indeed, or because we're going to bring it down to this level. And so once again to that 4 hours, so I can grab it, and that's going to be putting in additional for what we could finish here on the 5th. So that's going to be same manner. I'm going to go up here. I'm going to go like that, and I got to take it all the way up to here. Now we're comparing wave 1 to wave 5, minute degree. We've already looked at minor 5, then we looked at intermediate wave C, where potentially these could stop. Now I'm going to take it back down to the hourly chart. What are we looking at? We come up here, all of these. Let me just clean this up because there's too much there, and we don't need to see this one, this one, this one, this one, this one, or this one, or this one. We can leave that one. Take that one off, that one off. This one we put. As I just really reset this, because then we're going to get everything we need. Again, remember, I'm just doing nothing but a pure technical picture. Okay, so technically, where do we start to run into a bunch of stuff? This is basis the NASDAQ cash. 14,349, basically, I'm going to say if this thing gaps up, which is looking like it will, that's likely where we're going to hit. Above it, then we have 14,403, 14,432. Now, that's the hourly. 1.618, where minute wave 5 would be 1.618 times the length of minute wave 1, is coming in at 14,432. All right. So above that, 1.382, which was going to be for minor wave 5, sorry, is going to coming in at 14,602. These are the technicals. 1.618, as we just said, of My minor wave 5 is 14,922. Now going back out, that's the minor. And for the 1.618 of wave C, those are the ones that's where it goes from now. 618 equality, 1.618 is 15,643. I'm not suggesting that this is what's going to happen. This is a pure technical review, and these numbers are according to combining Elliott and Fibonacci, what Elliott found or what has been found, and what mathematically gets inputted. Okay, so these are mathematically equations, and these are the numbers. So what's going to determine? There's a lot of factors. I'll cover those in the next update. So in keeping with my goal here, moving averages on the daily are all continuing to point higher. The wave pattern itself does suggest bringing it back down within this minute cover, this minute count here. What it can be finishing is where the difference would come. It is still 5 waves. It is still going to finish up somewhere, I believe, in here. And then we'll drop. And it'll be that next drop, it's really going to be revealing, because if it's a 1, 2, 3, 4, 5, then we're looking for the end and a major turn. Again, I will go over fundamentals. If not, then the party continues and we continue to move up, but likely not before a pullback. So if we're finishing 5 up, we should get an ABC. It is from that level that we will be able to determine, maybe even before, depending on how it comes off. So 2 scenarios, both are very applicable. Both stay in force. And that's where I'm going to leave it for here. Come back, because the next up will be the big picture technical update for the Treasuries.